You're leaving between $600 and $1,200 on the table every single year, and the ATO is counting on you not noticing. That's the tax-free threshold most Australian taxpayers completely ignore. And before you say, "I don't earn enough to worry about tax," that's exactly why you should care about this, because you might actually get money back. Here's the actual number. The 2024-25 tax-free threshold in Australia is $18,200 per financial year. If you earn less than that, you don't owe any tax, full stop. But here's where it gets interesting. If you've already paid tax on money you earned under $18,200, you can claim it back. The average Australian working part-time, freelancing, or juggling multiple jobs pays roughly $800 per year in tax they don't actually owe. Over a 10-year working life at an average interest rate of 3.5%, that's $8,400 you could have had sitting in an offset account earning you money instead of the government earning it. Actually, before I get to how to claim it back, I need to show you the exact math on why so many people miss this. If you're working a part-time job and earning $15,000 per year, your employer is likely withholding tax at around 21%. That's $3,150 they're taking from your pay over the year. You don't actually owe that money, not a single dollar of it. When you lodge your tax return and declare your actual income, the ATO refunds you the full $3,150. That's money sitting in someone's account waiting for you to claim it. But here's the thing. Most people don't lodge a tax return if they think they don't earn enough. That's mistake number one. The second mistake is thinking your employer got it right. They didn't. They applied a standard withholding rate that assumes you work full-time all year. If you don't, you've overpaid. Let me give you the exact scenario the data shows is most common. A student working part-time earns $16,000 over the year. Tax withheld, roughly $3,360. Tax they actually owe, $0. Tax they can reclaim, $3,360. And it takes about 10 minutes to lodge the claim online through My Tax. Now, if you earned over $18,200 but under $45,000, you're in a different position. But you're likely still missing money. Here's why. Most people claim the standard deduction for work-related expenses, which is $375 per year if you're claiming the simplified expense method. But that's not what you should be doing if you actually have legitimate work expenses. If you bought a laptop for work, software subscriptions, professional clothes you don't wear outside work, training courses, or professional fees, each of those is claimable separately. Here's the math. Someone earning $35,000 per year working from home might have laptop and software, $400 per year depreciation, home office internet, $240 per year, professional development course, $600, union or professional fees, $180. That's $1,420 in actual deductions vs the $375 simplified method. The difference, $1,045 in extra deductions. Our 37% tax rate, that's $387 per year you're not claiming. That's actually infuriating when you see what it adds up to over 10 years. $387 per year over 10 years at 4% interest in an offset account becomes $4,310 you could have kept instead of handed to the ATO. So here's exactly what to do starting right now. Step 1. Gather your payslips for the entire financial year. Write down your total income. If you had multiple jobs, add them all together. Your total income is what you're declaring. Step 2, go through your year and list every work-related expense you paid for. Keep it honest. If you didn't actually buy it for work, don't claim it. The ATO audits at random, and if you're lying, you'll owe back payments plus penalties. It's not worth it, but if you did spend money on legitimate work expenses, claim every dollar. Step 3, log into My Tax or use the ATO website. Enter your income and deductions. The system will automatically calculate your tax position. If you're under $18,200 with no deductions, you'll see a refund amount. If you're over it with deductions, same thing. Step 4, lodge your return. It costs nothing. Takes about 10 minutes. Here's what happens next. Most refunds land in your account within 2 weeks if you're lodging electronically. If you're lodging on paper, it can take up to 3 weeks. Now here's the part most people never think about. Once you get that refund, most people spend it. That's the default behavior. But if you redirect it, watch what happens. Let's say you get $1,200 back. If you put that straight into a high-interest savings account instead of spending it, and you do this every year for the next 5 years, you've got $6,000 plus interest at 4.25%. That's actually $6,520 after 5 years. You've just created $520 out of thin air by not spending it. But actually, here's the smarter move. If you've got a mortgage or a personal loan, put that refund straight against the principal. A $1,200 refund against a mortgage at 6% interest saves you $72 per year in interest over a 20-year mortgage. That's $1,440 you don't pay the bank. Do that every year for 5 years and you've saved yourself over $7,000 in interest payments. The third option, put it into your superannuation. You'll get a tax contribution offset of 15%, so your $1,200 becomes $1,411 in super, and you don't pay tax on the growth. Over 30 years at 7% returns, that $1,200 becomes $11,400. That's compounding at work. Actually, let me be really clear about one thing because this trips people up. If you're under 24 and you haven't filed a tax return yet, filing now doesn't trigger the ATO to come after you for other things. You're not opening a can of worms. You're just claiming money that's legally yours. The ATO processes millions of tax returns every year. Lodging one isn't a red flag. And if you're thinking, I've missed the last couple of years, you can still claim. You've got up to 5 years to lodge historic returns. There's no statute of limitations on getting money back, only on paying money in. Here's the 90-day snowball. Today you lodge a return or check your position. Within 2 weeks you get your refund. You redirect that money into interest or loan paydown instead of spending it. In 90 days you've got the money working for you instead of against you. Do this every tax year, and by the time you're 40, you've got an extra $30,000 to $50,000 depending on your income level. This is one of the few times the system actually works in your favor if you know how to work it. Most people don't. Your bank won't tell you. Your employer definitely won't tell you. The ATO will if you ask, but they're not exactly marketing it. Tomorrow morning, log into my tax or the ATO portal and check your situation. If you haven't filed, you'll see the option to do it. It takes 10 minutes. Then go through your year and list any work expenses you actually paid for. You'll be amazed how many you forgot about. Dollar displacement. Subscribe for next week when we show you the super strategy your employer hopes you never discover.